everybody, welcome to Weekly Market News. Today is Monday, 25th of January, and let's begin the new week, which is full of expected events as Fed has a meeting on Wednesday, and obviously there is a continuation of earnings season across the world. So let's look at the markets, what they were doing last week, and what we expect from them in this week ahead. As we began the last week with lower volumes from US, as there was a national day, Martin Luther King Day, and the volume came back, and with volumes from United States, there was also extremely positive sentiment back on the markets as S&P 500, Dow Jones, Nasdaq, they all closed close to or created new record highs. So the positive sentiment is there. We are kind of back in the track where we were a few weeks ago. If you look at the markets from the beginning of this year, we had a huge gain at the beginning of this year. Then we had some consolidation, a little correction by the dip, and the dip was bought, so the stocks went up high again. There's not much really to say about the factors or the sentiment, what drove the sentiment so high. This is mainly a thing that we see on the market as the U.S. stocks are supported from huge fiscal and monetary stimulus, and we will have more details on that on Wednesday when there is a FOMC meeting. So we will have to wait for that, look out for that. But as we are speaking stocks right now, we cannot forget the fact that the earnings seasons has one of the biggest weeks ahead. Let's look at the earnings whispers and what they can tell us about this week. And like I said, it's pretty rich. It's pretty rich. Let's look at this week. So Monday, not really that interesting, as you can see. No big companies, but on Tuesday there are results from AMD, Microsoft, 3M, Starbucks, Johnson & Johnson, Verizon, a lot of big companies. And on Wednesday, Boeing, Apple, Tesla, Facebook, AT&T, Thursday, Visa, American Airlines, McDonald's, and many, many more to come on Friday. It's closing by Caterpillar and SAP, Chevron. Like I said, extremely rich week for earnings from fourth quarter. So we will have to wait and look for that. As right now, the earnings that were reported already, we have experienced something about 70-75% beating expectation from the analyst on revenue, EPS, earnings. So far very positive for very positive earnings season. So we will have to wait how the big companies, big tech companies, which are driving the sentiment, will perform in the fourth quarter. And it's looking pretty good. So we will have to wait and see. Other main focus is obviously on the fiscal stimulus, where Joe Biden is trying to push his 1.9 trillion economic plan, which obviously doesn't have much of a support from Republican Party, as there's a lot of aid for local business, local governments and state governments, as well as unemployment benefits, as well as direct deposits, checks, PPP programs. So there's a lot of good things, a lot of unnecessary things according to Republicans. But overall, it's something that markets kind of work with, that might help them to push even further to another record highs. But at the same time, obviously, this money will go to private sector, and Fed, although he really wants to push for the fiscal stimulus as well as Janet Yellen, which is she's now the new Treasury Secretary. The fiscal stimulus is going to have tremendous impact on inflation, and then inflation is something that Fed doesn't really want right now. So he is trying, or the Fed FOMC is trying to keep the rates as low as possible, keep extremely loose monetary policy in order to support the economy, which is now battling with the second wave of the coronavirus. So that is something that probably will take effect in the later months, but might be very well a problem. So the fiscal stimulus and the fiscal support should very well be also adjusted and think about pretty well, because this is no joke for the future of the economy, which can be very inflationary from all the fiscal and monetary support, and as well as the vaccination now begins, and countries get vaccinated, and this has obviously or will have obviously tremendous impact on when the economy and how quickly gets back on the track. So we'll see how this thing will play out. So like I said, US stocks, positive sentiment overall. European stocks had a little bit of doubts back in the late stages of last week, as we had some numbers from Eurozone. Let's look at that real quick. If we can find it, there was a PMI, several PMIs from several European countries, especially Eurozone. You can see right here that the PMIs from service sector, which is the key sector for developed economies, dropped to 46.5. Then in Germany, 46.8. Composite dropped to 50.8, and a Europe composite 47.5, and the services 45. So those are bad numbers. We are still below 50 points, which indicates expansion in the sector. So this was the main source of some nervosity on the markets, but as you can see, that the dip was bought again pretty quickly, and we have managed to close the week in a positive territory, even in Europe, although you can see that the sentiment or overall the performance is much more volatile than in United States. So so that's about it. That's the stock markets in the last past week. Let's look at the Forex, which was again quite interesting, as US dollar lost some of its ground and some of its gains, and we kind of turned around. Like I said, we are back on the track, so positive sentiment on the markets, the stock indices are rising, and the US dollar is obviously declining, which took effect here on Euro USD. Right now we are kind of battling with 121.70, which is a key level. You can see the support here, and obviously here we have some other very interesting areas. I think 122 is going to be the key level for this week, as well as 121. When we can kind of drop below and even test the lower levels again, we'll see how all this thing will play out this week, and how the markets will react. So Euro is fairly positive from last week. British pound, obviously, no big surprise. It's coming to a realization that British pound is not really that bad of a currency. When US dollar was appreciating, the British pound was rising as well. So if US dollar is really going to keep declining, then the GBP is probably going to break this high, even going to break this 137.04 level, which got tested from the other side right now, and there's some short activity over there. But overall, like I said before, this is very unprecedented time for the world economy, and the British pound is battling it very well, and I think it will perform well in the short term as well. Other pairs, we can look at USDCAD, as we have something. I froze here. That's not good. So I'm gonna turn myself off. USDCAD, pretty similar to what was happening on GBP and EURUSD. Quite interesting was the whole week on gold, as gold was able to retreat and kind of bounce from 1800 level, very close to 1800, bounce above 1870. You can see right here 1870 all the way to 1875. That's much more volatile. It was a much more volatile week than the previous week. You can see we were kind of consolidating here. It was a very choppy session. Here, well, it was some unprecedented and unexpected volatility. So this week, again, I really do not expect anything big from gold. If something, I'll probably bet on the fact that the gold is going to keep rising a little bit above 1850. But I think it's going to stay in the range, and probably going to range for another week with some intraday volatility. But on a 4-hour candle, it shouldn't be that big of a deal. So if you want to kind of trade this thing, I would wait for some type of pull back to the lower levels, and then maybe speculate on rising back up. And last but not least, let's look at the oil. Oil market, as well as gold, has really not surprised me in the past week. I do not expect, it did everything what I expected from him, and I think I expect the same thing for the next week, as the demand is still under heavy pressure from lockdowns. Supply is somewhat similar, as Saudi Arabia agreed that they will cut production by another 1 million barrel through February and March. So it's looking like it's balanced, and I think the price should reflect that. So I will expect again this week that we will consolidate somewhere around 52 and 54. Somewhere 52, $54 a barrel. I think those will be the key areas. Some intraday volatility will be here, so some mean reverting strategy can be used for trading oil this week. Like I said, let's look at the macroeconomic data that we have ahead of us for this week. So on Tuesday, there are job data from UK. There is some consumer confidence index reported on Tuesday as well. On Wednesday, do we have, except Fed? There is durable goods orders, stocks exchange, excuse me, and FOMC conference and interest rate decision. So this is going to be very interesting. They are expected to kind of stay with the fact of very loose monetary policy, which ultimately needs to support the stocks and put some pressure on US dollars. So we will see how this thing will play out. And on Thursday, we do have some interesting data. We have GDP for in the US. I believe this is going to be the first number for Q4 with the PCE index. Also interesting. Housing data from US. And on Friday, nothing really interesting, right? GDP data from many European countries. So this will be quite an interesting day. So, like I said before, a lot of GDP data. We have FOMC meeting. We have earnings season. We have Apple, Facebook, Microsoft, AMD, a lot of big companies. So really watch out for the volatility on the stock markets and indices, and as well as some volatility, especially on US dollar currency pairs. So that will be it for today's video. I thank you guys for watching. If you have any question, leave it down the comment section below the video. And I will see you next week.